started. Thanks everyone for joining us today. We are at day 3 of our 4-day DACOM DeFi series, jointly brought to you by CryptoCompare, Solidus Labs, Securrency, and the Global Digital Asset and Cryptocurrency Association. This event is called Rising Tide, Challenges and Opportunities for Regulated Decentralized Finance. And each day we're bringing together some of the industry's most foremost thinkers in the DeFi movement, whether they be from leading projects and digital asset trading venues, traditional financial services firms evolving to embrace this new evolution, or regulators seeking to bring clarity and transparency amidst a maturing and evolving financial landscape. My name is Alissa Ostrove. I'm the Chief of Staff at CryptoCompare, a leading provider of digital asset market data and indices. This event would not have been possible without the hard work of my fellow co-organizers, who I've really had the pleasure to work with over the last couple of months to put this all together. Chen Arad, who you'll see on the panel coming up in a little bit, who's the Chief Operating Officer of Solidus Labs. They are a category definer for crypto market surveillance, offering the first crypto-native risk monitoring hub. Jackson Mueller, who's the Director of Policy and Government Relations at Securrency, a leading developer of institutional-grade blockchain-based financial and regulatory infrastructure technology, and David Carman, who is the co-founder and board member of the Global Digital Asset and Cryptocurrency Association, a self-regulatory association for the crypto industry. The format of today's event is a 30-minute keynote fireside chat, followed by a 1-hour panel discussion. In today's session, we'll first hear from a speaker we are truly delighted to host, Mr. Joseph Lubin, followed by a panel discussion on the future of trading venues, moderated by my colleague James Harris, who will be hosting a terrific panel of speakers. If you haven't yet signed up for our session tomorrow, it's our final day of the series. We're going to take a deep dive into the regulatory landscape. We have a keynote discussion with FinCEN's newly appointed Chief Digital Currency Advisor, Michelle Corver, in her first major public speaking appearance in her new role, followed by a panel about that delicate balance between risk and privacy. That's going to be moderated by the Executive Chair of Crypto UK, Ian Taylor. So without any further ado, I have the great pleasure to introduce our keynote speaker for today's event, who it's really an honor to host. He is the CEO and founder of Consensys and co-founder of Ethereum, Mr. Joseph Lubin.
Hey, Alyssa, how are you?
First, thank you so much for taking the time to join us today. You truly have an unparalleled vantage point given the wide remit that Consensys covers. On the one hand, Consensys software does work at the protocol layer for Ethereum, and Consensys Mesh acts as a venture studio and incubator for projects in Ethereum. And in so many ways, DeFi and the Ethereum ecosystem are synonymous. Could you just speak a little bit to your role in both organizations and how you see both of them evolving?
Yeah, so my role would be founder and CEO of both. Consensys Mesh is essentially the original mothership company. It's where we incubated lots of projects and continue to incubate projects. It currently manages a portfolio of equity and tokens because we've made a ton of external investments over the years, does some R&D. But a year ago we spun, and we spun out many companies over the years from Consensys Mesh. A year ago we spun out a company called Consensys Software Inc. Because Consensys Mesh was essentially stood up and evolved organically to open or to play a part in opening up the ecosystem. And in order to compete with a very competitive dynamic ecosystem, we noticed that several of our projects, which are pillars of the Ethereum ecosystem, were coalescing into a blockchain stack, and B, we really needed to focus on being a integrated software product company. And so we spun out several of those projects. So it's MetaMask and Infura and Quorum and a handful of other projects, essentially into a blockchain stack company. in the dominant blockchain stack in the ecosystem. Consensys Mesh continues to incubate some great projects. It's focusing pretty heavily on the future of work these days. So it's doing work on something called Baseline Protocol, which enables companies to sync up their private information without the possibility of leaking that information, just using zero knowledge proofs that get registered with one another on public mainnet. Consensys Identity sits in that company, and a project called Sobel, home to a friend of yours and mine, Donnie Benjamin, is a project that essentially provides a sort of flatter organizational coordination tool to enable companies and especially DAOs to essentially do all the soft and important communication and organization things. Leave it there.
Absolutely. It's so, I mean, it's so interesting that really some of the most used Ethereum ecosystem tools are all falling under the Consensys umbrella. I'm just curious, how do you kind of keep all these projects aligned while sort of still giving them enough autonomy to kind of be able to make their own decisions, kind of incentivizing founders to be able to build things while still sort of keeping them under your umbrella?
So all the projects are tight with their user community, whether it's developers or end users, developers in the sense of Truffle or our diligent security audit team, end users for MetaMask, where we're a little over 8 million monthly actives right now. So it's really exploded in usage. We have a customer success team that is world-class, in my opinion anyway. It's doing a tremendous job in helping people understand the technology. It's a really complicated environment out there, as you can imagine. Lots of scams and phishing, etc. So it's really a battle. And Frontline is our customer success group, and each of our product teams are essentially really intimate with their user base. So they're, for instance, Truffle, our software developer tool suite, is all about just making life more wonderful for developers. And we essentially operate a flywheel inside of Consensys software, where we do developer enablement in many of our projects and end user enablement, financial enablement, and other enablement as the sort of other side of the flywheel. So we facilitate the making of many applications and protocols, and we facilitate the using of those same applications and protocols.
Awesome. It's fascinating to hear about the magnitude of what you've built. I do want to switch gears here a little bit to a development that's probably weighing on some of our attendees' minds. In early August, Ethereum is due to undergo Ethereum Improvement Proposal 1559, dubbed the London Hard Fork, really the most meaningful upgrade in some time. Could you summarize what improvements this is going to bring to the community?
Sure. So 1559 basically takes a look at the fee mechanism, paying for transactions, and the block mechanism, where all the transactions are essentially collected, and revisions the whole thing, basically. So it doubles the size of blocks, but targets blocks to be half full. And what that does is it provides elasticity, so that if you have a very high value, high priority transaction, you're pretty much guaranteed that there's going to be some space in the block for you if you pay essentially an incentive fee for the miners to pick up your transaction. There is a new mechanism that basically burns what we're calling the base fee. And so the burning or the size of the base fee adjusts dynamically in order to try to keep those blocks half full. So if a block is less than half full, or blocks are less than half full consistently for a little while, then that means that probably the base fee is too expensive, and that there are economical or transactions that could be economical if the base fee was a little bit lower, and so you make the adjustments to try to make sure that as many economical use cases as possible make it into the system, and high priority transactions also make it in. So that moves Ether to essentially be a deflationary cryptocurrency, and that's going to have tremendous implications for our ecosystem. People are starting to call Ether ultra. I'm spacing on the name. Ultra solid money. So basically, gold and Bitcoin essentially have fixed amounts in the world, or will over time, and Ether is now deflationary. So the monetary base through this burning mechanism will be shrinking, and so that combined with the large amounts of Ether that are frozen in the proof of stake mechanism and frozen in DeFi set up a pretty significantly deflating monetary base.
Ultrasound money. Yeah, that was
exactly
what I was going to kind of ask about, if you saw any sort of risks as well to users of Ethereum powered DeFi projects that could potentially play out.
So risks, just general risks in the DeFi space. Certainly, it's a pretty young technology. Blockchain technology is pretty young. Digital assets are pretty young, and essentially democratizing the ability to build out a global financial system, and democratizing immediate access to a global financial system is both incredibly exciting. It is empowering. It enables many more people, small organizations, to have economic and political agency, most for the first time in their lives, and also it's a young system, so it's going to be sharp around the edges, and we will see many great systems being built, and we'll see issues with those systems, both just because the protocol was not built optimally, or because hackers figured out some tricky way to get between protocols or something like that, and perpetrate some scheme. But the amazing thing is that all this is done out in the open. It's open source, and hordes of really smart people, tech nerds, financial nerds, are poring over this stuff and fixing, hardening protocols, DeFi protocols, very rapidly when issues are detected.
Absolutely. And I think while we're sort of on the subject of risk a little bit, and I was thinking in my head initially sort of the hard fork and what that kind of poses to the community, but I want to kind of pivot to the regulatory question a little bit, as it's one of the themes of this particular event. And yesterday we heard from Commissioner Berkovitz, the CFTC, on how they're sort of approaching DeFi, and we're certainly seeing that regulators are not taking a blind eye to really considering what's happening in the space, and was just really curious to hear your thoughts on the regulatory question as regulators approach DeFi. What should they consider? How should they approach this space?
So I guess the first and healthiest approach, in my opinion, would be not to regulate technology, but to regulate use cases of technology. We've been pretty comfortable with how the SEC has come to understand our space very well. Certainly greater regulatory clarity could help, but it's pretty clear to us that they're doing their best to avoid stifling innovation. And there's a lot of opportunists out there who are doing things and not doing their homework, and so the SEC's applying their rule book, and they're applying new elements too. Elements like sufficient decentralization is sort of a new doctrine that has been applied recently. In terms of tougher issues, things like money laundering, we are very comfortable that crypto institutions, if they're essentially operating on nation state protocols, acting like banks, connected to banking infrastructure, it's perfectly reasonable that that they be regulated, and the kinds of controls placed on banks should also be placed on the gateways between the traditional financial system and the global decentralized financial system. We do believe that it will be possible often to thread the needle so that a software developer like us, for instance, can provide software tools and enable users to interact with DeFi protocols, with cryptocurrencies in a peer-to-peer fashion, so that we're not custodying their assets, and essentially the software is being made available to users, and activities that the users do is in a non-nation state jurisdiction. So we're gonna, I'm sure, have debates about that with regulators in the near future. But it's hard to understand how decentralized finance protocols that don't really sit in a specific jurisdiction will be regulated. So it's hard to imagine regulating the software companies. It's possible to imagine regulating operators of decentralized finance protocols, but you can just put a piece of software out on Ethereum and not operate it. And so those will be very interesting discussions going forward.
Absolutely, definitely will be, yeah, very interesting to see how things play out. Hopefully, bringing more clarity to the space, as you said, and really promoting projects rather than hindering them. Awesome. Another theme I wanted to touch on is just the increasing institutional interest in DeFi, and I think honestly, just looking at the signups from this event alone, we see that the interest is there. And I'd love to hear from you what trends you've been seeing regarding how institutions are interacting with DeFi and the Ethereum ecosystem.
So it's definitely on. Certainly we're in a slower period right now after a tremendous run up over the past few months and a bit of a blow off top. But I think we're in a paradigm shift, and it's pretty clear that many different kinds of institutions are realizing that we're in a paradigm shift, that the legacy monetary systems and financial systems are experiencing challenges, and there's just so much promise in this new technology. So we're seeing the smaller funds that have been playing in our ecosystem being joined by some of the biggest hedge funds and multi-asset funds in the world. They're developing very serious sophistication and looking for ways to essentially safely deploy very large amounts of capital. So we expect to see a ton of money moving into DeFi. And there's the realization that state-issued currencies, for the most part, are devaluing and not yielding very much. And this new ecosystem consists of digital assets, cryptocurrencies that have been growing in value for years. It's been volatile for sure, but it's been higher highs and higher lows for a very long time. And it represents the growth of a brand new trust foundation for the planet, decentralized finance ecosystem, and everything that will build on top of that. So it's likely that these digital assets will grow in value significantly, and they're yielding quite significantly, which is just attractive to some more traditional organizations. And so we expect to see a tremendous amount of flow from the legacy economy into the new economy. And I mentioned MetaMask before. We have a version of MetaMask called MetaMask Institutional, which is in a private beta right now, but we're seeing a lot of interest to basically use a tool that everybody's familiar with, but has tax reporting and roles and permissions that are appropriate to an institution. So it's on.
On that note, do you think, or when do you think, maybe is the better question, that we're going to see commercial banks plugging into DeFi to earn yield?
So it's a regulatory issue for them. Certainly, there is extreme interest in the major commercial banks, and there's some activity, but they have real regulatory concerns, and they have to be very conservative. I anticipate that it will be just so compelling as more and more money moves into the decentralized finance ecosystem. The capital itself, the liquidity itself, is going to draw in maybe not the major commercial banks initially, but lots of entities will want to either earn yield or participate in other ways in the DeFi ecosystem.
So what do you think right now are the biggest unsolved problems in DeFi? What should potential founders be focusing on?
I think of two big things that may not be that obvious. Maybe one of them's obvious. So the first one is DeFi related to NFTs, to non-fungible tokens. Non-fungibles are going to be just a massive aspect of the global economy going forward. They're not just going to wrap art or wrap content, but they're going to be digital twins for real world assets. They will be digital twins for people. You'll operate your vehicle through an NFT. You'll potentially be able to lease it or lend it, and enable or disable certain controls, and you'll own it through that NFT. NFTs are gonna be the software housing of different businesses. So that space is just going to be enormous. It's going to revolutionize software. And if you look in the current economy, there's a lot of financial infrastructure built up around fungible tokens, like shares and currencies. But there's a huge amount built up around non-fungibles, things like titles, mortgages, leases, etc. And so we're gonna see very soon, and it's already starting to happen. We're gonna see automated market makers. We're gonna see stable coins based on NFT collateral. We're gonna see different kinds of funding systems. And so it's going to be very similar to how fungible DeFi works, but it's going to have to be unique in various different ways. The other really big piece that our ecosystem isn't really addressing is the spaces between protocols. So the protocols basically spend a lot of money to security audit themselves, sometimes several times over. But we need some sort of mechanism whereby several protocols get together and smart security audit professionals try to think about ways in which multiple protocols could be used for exploitation.
And are you seeing a lot of interest from institutional investors in the NFT space?
Yes, it's huge. There was a bit of a blow off top in NFTs recently, but there's still a ton of market activity, and many large organizations are figuring out their NFT strategy. Usually it's around content, but it's just going to be an enormous ecosystem around content in the near term.
Awesome, really interesting. We're just about coming to the end of our time here. I do want to ask you what we've been sort of asking all of our keynote speakers throughout this week at DACOM. Just take a look into the crystal ball a little bit. I'm pretty sure 1 year in crypto is like 10 normal years anyways, but specifically in the context of DeFi, what will the DeFi space, in your view, look like this time next year? What are we going to be talking about in 1 year's time? And in the next decade, in 10 years, what do you think we're going to be talking about?
So Consensys has been very heavily focused on the Ethereum technology, and we remain heavily focused on Ethereum just because it's biggest ecosystem by far, most mature in many ways, most decentralized, and the trust characteristic comes from decentralization. And if you're going to issue valuable digital assets, you need a trustworthy infrastructure. So we believe that Ethereum will remain the hub of the decentralized protocol ecosystem for a long time. But we also believe in a multi-protocol world, different kinds of protocols that subserve different functionalities. And even with respect to smart contract blockchain systems, there's going to be real need to have different characteristics in different protocols just to subserve different functions. And so we see an internet of blockchains emerging. And I think over the next year, we will see a bit of an abstraction going on where different layer ones, different layer twos, and we're involved in helping several layer twos on Ethereum launch or run, where it will become easy to track your tokens in a wallet like MetaMask, for instance, and not worry about exactly which flavor of a token it is. So you might have Bitcoin on the Bitcoin network, you might have Bitcoin wrapped on the Ethereum network or on one of the other networks, and you shouldn't really care what flavor of Bitcoin that is, and you should be able to trade tokens regardless of what network, what protocol they're sitting on. So I anticipate an abstraction will happen in the user interface, making things a bit easier. It may be ambitious to predict that within a year, but we'll see how far we get.
And 10 years?
10 years. 10 years, we're all just going to be living our lives in DAOs, I think. DAOs for work, DAOs for play. And decentralized finance will just be called finance.
I love it. Thank you so much, Joe. Unfortunately, we're out of time here. It's been so insightful. on behalf of all of our attendees and my fellow event organizers, really want to thank you for joining us.